Good morning. Good morning, everybody. This is Don. It's pushing 9 o'clock on Friday, and we're going to give you a view of Swing Machine. Now, we're somewhat limited into the screen that we can show. We have to fit this to a 19, what is it, 1080 by 19, or 1950 by 1080. But I want to show you when these tools sit on your desktop. There's a lot that you can do. And the idea behind the radar is to be able to see, we can put all this on a chart, but wouldn't it be nice to be able to see everything that you want to see um, without looking at a chart? What do I mean by that? Well, let me show you something. And if you are an annual member, um, stay tuned for the next few days here because we'll be sending this out. We have reworked a tool, and I want to bring this over just on a daily basis. So I'm just sliding this over, and you're about to see. We're on the ES. Here we go. This is the daily pivot information right here. 5687.33. This is the daily pivot. Now it gets repeated. We've done this deliberately. We repeat the daily information um, on an intraday basis. On an intraday basis. So you get to see it, and you can also put this on an intraday chart too. So this is the daily pivot for the NQ. Now you notice it gets shrouded in yellow. If the current price falls between the S1 and the R1, support 1 and resistance 1, then the pivot will get lit up. But if it falls above, if price is below the S1, then this will get lit up. So for instance, down here on oil, the daily pivot on oil is 59.31, the daily. She's currently trading above her R1. She's going to be trading. She's going to be in between R1 and R2 without even looking at a chart. By the way, if you want to, I really didn't even have to change this to a daily, but let me see if I can slide us back here. I can. And also, I can even change, if I wanted to know, for instance, I'll just do this now as an example. Add a blank row. No, let me do it this way. Bear with me. I'll add it here. Very, very powerful. At ES. And I want to know maybe at the beginning of the week. I don't have to know every minute of every day, but I want to know on a weekly basis what are the weekly pivots. So let's go look. This is kind of interesting too, right? The weekly pivot is 56.29, right? 56.29. So the daily, it's rather unusual. The daily, maybe a little ahead of itself because weekly does trump, right? And then here is the S1, S2. So the first level of support is 55.34. The resistance is at 58.50. This is on a weekly basis now. Weekly, 5,800, right? It can be pretty difficult getting to 6,100. It can be very difficult. And you can do this on anything and everything. And of course, this can be lifted and can be placed. We can actually get the weekly pivots and the daily pivots on intra-day charts, including point and figure or Renko or range bars. That is not easy to do. You want to know when you get started on any given day. You kind of want to have a feel. Even here, let's put gold on a weekly basis. You want to have a feel for where are we on the field. So gold, the weekly pivot on gold is 32.72. We're above the R1. We're pushing into 33, the R1 is 33.49, 33.50. So kind of important maybe to know. And we can see, even though this is intraday, the daily pivot is 33.40. The R1 is 33.87. The R2 is 34.69. And where are we? We're currently at 33.40. So, any case, we're going to put this back to a 5-minute. You don't have to see the weekly, like I say, every day, or the every minute of every day. In fact, the weekly is not going to change once you take a look at it on, on Sunday night or early Monday, and you're making your notes, and you have a pretty good idea where the market, where the battle lines are drawn. Swing machine. Again, all of this, every aspect of this can be put onto a chart. It absolutely can. And we can set alerts to any and all aspects of it. And we can write strategies that can go back in time, and I'll put this back to a 5-minute, and tell you what the performance is on any aspect of it. And we can do it on multiple time frames and even multiple markets. Pretty powerful. There is a learning curve, though. It does take some time. Let's see what they want to do today. When a market is truly in a bullish mode, they generally don't like to go into a weekend short. They generally don't. But if the market is still tentative, a little fearful, they generally don't like to go into the weekend long. So the daily closes are much more important than the daily opens, and the weekly close is always much more important than where the week opens. I want to see, where does this bitch close? And let's just, once again, let's put this ES on a daily. And let's just look at our primary screen. We're at 70. You would think we'd be up here. We're not. We're not. Now, if we went to 5,800, we'd probably be up in there. And look at where the daily is at 30 on the VIX. So the market is right here, right now. My interpretation is very proportional. It makes sense to me. It's very orderly. And the VIX has come in. It's really trading nirvana for intraday action. And the prospect, as long as this VIX stays subdued, the prospect that this market's going to move 2 or 3% in a day, intraday, is going away. The only way we're going to get those types of moves again is that VIX is going to have to come up from where it is. Now, we could move 1%. In fact, we've just done that, and well, that was yesterday. 1%. We could do 1% with this VIX at 22. We could do 1% in an hour. Maybe even a little bit less, one way or the other. But the more this VIX comes in, the tighter the ranges will get. Now, all these armchair technicians and everything, they're looking at what? They're looking at 40-week moving averages and 50-day averages. That is like trying to cut your steak with a butter knife. That is so old, so archaic. That's to the point of sophistry. That isn't for anyone who is looking at the markets day in, day out, and trading day in and day out, because it's so sloppy and so lagging. it's to the point where it's worthless. But we're going to put it back. We're going to use surgical tools. We're going to use a steak knife, and we're going to carve them up. These tools can be on your desktop. They can be. But I do require that you go through a Q school once, just once. I just want to make sure that you have a chance, a quality chance, to ask all the questions that you want to ask. Not for one day, not just for 1 week, but over a few weeks. You get to see the market up, you get to see the market down, you get to see hopefully expanding volatility, contracting volatility, you get to see the market at night, you get to see swing machine, you get to see the paint bars, you get to see the strategies, you get to see the average wins, the average losses, trying to give you every opportunity to see, and giving you an opportunity to say, no, this isn't something I want to do. This is a little bit more complicated than I want it to be. It actually isn't. It's actually quite, when you settle in, it's actually quite simple, quite calming, and be quite effective. So if you have any questions, let us know. I've got to get my nose into the development center and get some things done here early this morning, and we'll be watching, and I'll try to periodically take a peek. If you are an annual member, I do want you to know that tool, the Fairway Chart Marker and the Fairway Radar, we have updated that, and we will be updating those files and sending them out to you probably early next week. And we also have some other tools that we want to make available. So you have it right now. That will be added to. You could add it to Swing Machine. Eventually, we may incorporate it in one file, and you'll be able to turn it on and off. And there's yet another few tools that we're going to just tweak it a little bit. To the point of almost being superstitious, though, we haven't changed the core presentation of Swing Machine in years. And we're not apt to do that without, considerable, testing and validating. We don't try not to change that. Good luck, everybody. Have a great day. Let's see what they want to do. Good morning, everyone. This is Don. It is 10 a.m. in the market is, just kind of drifting a little bit to the upside, just kind of hanging out up here. And the VIX, the 5 minute VIX, is under a downtrend, right? It's under a downtrend, so it's difficult for the market to sell off. If you're looking for that sell off, difficult for it to do it. And that's been the case since 5:50 this morning. We look at 550 and oops, there's my okay 550. The VIX is drifting lower and staying down. And at the 5 minute ES has been long since 545. Right, not doing a whole lot, but just hanging around. The 5 minute NQ is doing what? Same thing. It's long at about 5 minutes of 8. That's the last signal. Just hanging out. The Dow 555, the Russell 545, just hanging out. What we need and want to see, if you're looking for the sell off or a sell off, is you'd want to see the selling come in on the 1 minute on each of the four markets, ideally. We want to see at least a counter trend come in. We'd want to see them go short. It would be a counter trend to the 5. Not saying that you'd want to take that at all, but that's what we would want to see. And then as that occurs, we'd want to see the 5s begin to do what? Dip, and then confirm and actually go short. And as they're dipping, we'd want to see the VIX do what? We'd want to see it coming up into a rip and or ideally confirming in an uptrend, and either right before or right after, but very, very close. We're not getting any of that. Now, we put the ES and the NQ first because the ES is the most important market. The NQ is right behind it. They're attached at the hip. The Dow, less so. The Russell, less so. The Russell can be a barometer for risk. Maybe we should put that third. But so right now, the market is just a little directionless, just kind of hanging out. And we just kind of be patient. And this is a game of patience. I mean, you may want to get risk on. Market don't care, and so there's you want to aim small, miss small right here, right now. And on a daily basis, you saw earlier, we don't need to go back and look, but on a daily basis, the VIX is down around 30, the S&P is up around 70. It's a little rich. Can it go higher? It could. It could. Equally, though, it could. We could get a bit of a pullback. But at the meantime, that's what we're seeing. We'll stay out of your way. You got any questions? Be sure to visit Stock Market Caddy, and happy to take your calls. Thanks. Okay, so we're going to go ahead and show you two. Now, this is a 1 minute, 5 minute interval. Okay, this is swing machine, but this is not a complete view of swing, right? It is a view that's 1080p in order to fit, as best image as possible. When it's on your desktop, there's more that you can do and more that you can see. So let me try to do this. If my computer cooperates. Let's slide this over. So what I'm going to bring into view now is over to the right without even looking at a chart. What is this, Donald? This is the daily pivot. This is 5687. That's the daily pivot. Not the 1 minute pivot, not the 5 minute pivot, the daily pivot. Right? If you're trading intraday, you might want to know what the pivot, so S1 and S2, what those levels are. And you can see them right here without even having to look at a chart. And when that price action falls in between S1 and R1, that gets lit up yellow. And that's why, we're in the middle. We can go this way, we can go that way. But that's kind of where and even the daily traders are getting, they're getting probably rather impatient. We look down at Ethereum and we know that Ethereum's had a huge run, and on a daily basis, she is between her R1 and R2. So that can help you know where you are. Now, once we look at it, we don't have to, drill on it. I don't have to get, we don't want to get analysis by paralysis. But the beauty of Swing Machine, this radar tool, tick by tick, can give you everything that you need to know without looking at a chart. If you want to look at a chart, and the beauty here is this is time-based. So if you want to look at a chart, maybe you want to look at point and figure, maybe you want to look at Renko, maybe you want to look at range bars or something else to see the price action. You can certainly look at a 1 minute, 5 minute chart, and we can bring every single element of Swing Machine Plus, we can bring it and make it alive on a chart. We can do that. But if you can learn to fly the plane without seeing the horizon, and here comes the dips, right? You see them coming in ever so slightly. No, don't start putting trades on here. But you can see the price action just as we started to describe what we would need to see if this thing's going to come back. I'm not seeing much action on the VIX at all, still though. But you can see the 1 minute's coming in, starting to come in. Very, very powerful tools. And all of these can be put on a chart. All of them can have their own alerts. All of them can be and are capable of being a strategy in and of themselves. And those strategies can be on any interval, on any time frame, and can be looked at on a back test. We can trade them in multiple time frames. So it's very, very powerful. But you don't have to use it all. I'm not trying to overwhelm anyone or suggesting that you got to use everything on a given day. You don't. You just kind of take your time, and once you settle in and know what you're looking for, and you know where you are on the field. Same thing in golf, right? You don't want to get preoccupied with, the 3 or 4 holes before or the 3 or 4 holes to come. You want to stay, what the golfers talk about it, in the moment. In the moment. Executing the shot in the moment. But you get to choose here. There's no time clock on you. Golf is trying to increase the speed of play. You don't have to play real fast. Don't. You do a lot better just to take your time. Swing Machine can be very, very good at helping you get in, helping you get out, helping you stay in, but also helping you to stay out. Sometimes you just don't want to hit the shot. You want to wait. Okay, so we've just seen, okay, in front of our eyes, the 1 minute turned down at 5,700, right? Right about here. I'm not saying short it, right? I'm not. The NQ is doing the same thing right here at 20,244. The YM, less, not very important at all. I mean, we keep it up, but it's not very relevant. And here's the Russell. What type of trade is the 1 minute? It is a counter trade. The dominant trend is up on 5 minute. We're talking relative terms. Not talking about a daily or a weekly or monthly or the 50-day moving average or any, the 40-week moving average. I mean that's eating your steak with a butter knife. That shit's not helpful to us here. But what is helpful is understanding the 5. Now the 5 is starting to dip. So it's putting pressure on it. Now, the probability is, do not let me influence you here though, but the probability is that the 1 minute counter trade will fail. It might run up 2, 3, 4, 500. Might even run up $1,000. It might. And really, really good, disciplined counter traders, our members, they'll capture that money. They will. And they'll be aggressive because they know that it's a counter trend and that the likelihood is, not a guarantee, but the likelihood is that it'll fail. But every new trend actually starts with a counter. It does. And that 1 minute might keep going down and putting pressure on the fives, dipping them, pushing them down. And then right in front of your eyes, you might see, now it'll take 5 to 10 minutes at least for that 5 minute to go from a dip into a confirmed short. This is not a confirmed short. See that white? That's just saying, hey, look at me. I am pressuring down. But it is not. It's still a long here. It still is. That's not the signal. Signal is when this guy confirms short, then there it is. Now it's confirmed. Now it's short and it's got a white box and it's shrouded too. Took 10 minutes for that to happen. Not suggesting you go short the Dow. I'm not. I'm just giving you a little mini in service. And now they're starting to do it. Right? They are. Be careful though still. All right? They still may not make it. May not. They're at that inflection point. Now what I want to see, we're seeing a little bit. See the VIX? Oh, look. Got a little bit of buying on the VIX. So we want to see, we'd like to see if these 5 minutes are going to develop into something big. If they are, they got to confirm. They're not there yet. They're trying. And then we need to see the VIX do what? We need to see the VIX coming up. It'll show up here. Ooh, looky, pressure up. So we're early. Now, if a person puts on, 5 contracts, 10 contracts, or they over leverage a small account, then the pressure isn't going to be on the VIX. It's going to be on you. You won't have the patience. If you try to ski over your ski tips, over your skill set, you'll put pressure on yourself. You get up to the top of that mountain and you'll be trembling. And I know because I did it. I tell the story. Went skiing with a buddy of mine back years ago. He was a much better skier. I told him I knew how to ski, but I didn't know how good he was. Big guy too. He had huge skis. Like 7-foot skis. They were huge. And we were up in, where were we? We were in, I guess it's Northern California. What's that, Sun Valley, maybe? Yeah, Sun Valley, I think. I had never skied it before, never been there. Gorgeous. And we went up on a gondola, and I'm like, oh shit, what did I get myself into? And I remember getting off, and I'd never had this happen before, and we were literally at the very, very top of this mountain. And it was a skinny little path to get out, and everybody was like lined up. And I'm like, shit. I was in my 20s. I'm like, man, we are really up there. And the ski shop looked tiny. You could see it, but it was way tiny. We were way up there. And I never had this happen because when I turned to we're getting ready to go down, the slope was so steep that my skis stuck out, and there were like nothing under them. Like I stood there, but there was nothing under them. That's how steep it was. It was like, I felt like it was like at a 45-degree angle, but it was probably 20 or 30 degrees. And I remember turning to the guy, and I'm like, I don't know. He's like, Don, you know how to ski? It wasn't pretty. I went down, and I missed the first turn. I mean, I was scared, and I fell pretty hard. And then he came bounding down, and I'm shaking my head, and I'm thinking, I gotta get down this. All I'm thinking now is I gotta get down this mountain. And he's like, Don, you told me you know how to ski, right? And he was a guy my age, but it was good advice. I'm like, yep. He goes, get up and just turn. Don't look at the bottom of the hill. Just look at the tips of your skis and make turns. I'll see you at the bottom. And he just took off. I'm like, okay, I guess I can't take the gondola down. I'm halfway down. No, I wasn't halfway down. I'm laying in the snow. And I did. I get down the mountain, but I didn't go back up there. I said, hey, I'll see you at the end of the day. And I was over my skis. You can do that trading, right? We don't do that. We don't do that. We spend quite a bit of time, especially in the Q schools, going over this and making sure, that you understand the size of your account, the size of the leverage, and that, we need to, come up here, to the top of the mountain or the middle of the mountain. You don't have to go to the top and, make a few runs. You can do it mechanically or you can do it, robotically. But when we use the word robotic, and I had this conversation with a very nice gentleman from Dallas, he called the other day, and what he said was something that we hear, frequently. Not as much as you would think, but frequently. And it'll be like, I bought this robot. He didn't say it on these terms, but he said basically, I bought a robot and I got ripped off. Well, this is the thing. I don't know what robot he bought. I don't know. And so I wasn't not, and I'm not really interested. But I wanted to, and I want to make sure within the sound of my voice that folks understand. When we say robot, it's robot assisted trading. They are tools, decision making, trading tools, right? Right even here, down in here, tools. And you must have an acquired skill set to use the tools. Just like skis and ski poles are tools. You have to learn to use them or you could get hurt. So, that is the reason why. And it was kind of funny because, and it's okay if he's listening, it's totally okay. I get it. But he said, Don, I don't quite have the time and I don't have the capital to go through your Q school. Can you just sell me one program? And I'm like, no, we're just going to repeat. We're just going to repeat the error, right? Be saying we give everybody. We don't sell individual programs. We don't. You can choose to go through the Q school. It's going to take time. It's going to be 3+ weeks, depending on your schedule. We'll flex around it. We're going to give you the tools to work with. You're going to get a chance to work with them. You're going to get a chance to ask us questions from one day to the next. Make some judgments, make some, and inquire. As the market is underway, by the way, the 5 minutes have just confirmed short. Please don't take these trades, right? We're doing it from an educational standpoint, right? We're not trying to hand out fish. But there in front of your eyes, you've just seen the 1 minute counters. It was 15 minutes ago. There's 1200, yes, but they were counters. Then it was just 10 minutes ago. There's the time. These are shorthand. And the 5 minute is now short, and so isn't the NQ. All right. That works. What is the VIX doing? Well, the VIX is now responding to the market. I'd prefer to see the VIX act before, but you know what? As long as it's acting, and it's acting correctly, and I'd like to see it continue to come up, and it is coming up. It's hinting of a trend change. There's buying here. It's moving up, and it's ripping. So what does that mean? That tells us that in the options market, they're slowing down their call buying. They might be closing the calls that they bought 2-3 days ago. They might be getting ready for the close. They might be getting ready for next week. If they start selling their calls and start buying puts, then the broker-dealers who facilitate those trades have to do what? They have to buy and sell stock. When they buy calls, the broker-dealer's got to buy stock. When they sell their calls and buy puts, the broker-dealer's got to sell stock in order to hedge themselves. That is what drives markets up and down. It's not Trump. It's not whatever. It's the collective market making decisions on whatever. And sometimes, just as here, we don't ask why. Not interested. Don't really care. Market's doing what it's doing. If I want to play and contribute my capital to the liquidity, then I'm going to try to go with everyone else. And I will choose to come out. Now, if we have a member and he made his $500 or he made his $1,000, he might or she might be done. Done. We got 20 days a month. And you can see it. Now, we want to see, I'd like to see this continue. And I'd like to see this come up. Now, it's entirely possible. We're going to be going into a Q school ourselves and at noon. Frederick will be ready for you. But entirely possible to let you watch that these 5 minutes, they could run up. They could be up 2, 3, 4, 5, 6, 7,000. Entirely possible. We'd never know. So there's another half of Swing Machine that can tell you everything you need to see without even seeing a chart or seeing the horizon. You're going to be a much better pilot, a much more confident pilot, if you can fly the plane just looking at your dashboard. Can you imagine? Can you imagine flying a plane without seeing the horizon? Right? That would take, some chutzpah, right? It would take some training. But that's what they do, right? They train over and over again. And then when they do see the horizon, it's no big deal. They just fly. So, any case, that's where we be. It happens to play out. I'm going to shut up and get back to work. If you got any questions, let us know. Swing Machine is over. Well, in this context here, this has about 800 lines of code. That additional information to the right, that's a Bearcat. That's, hundreds of lines of code. That is not easy to do. Right? We're generating daily pivot information on an intraday time frame. And that can be done also on a chart. That is not easy. And it's tracking the price action of where it is now, where it is on that pivot information. Right? Now, I'm not that interested in it, right here, right now. I am interested in it, the night before, the morning of. I kind of want to know. I give it a look. I know where I am. Right? I want to know where I am on the field. It's kind of like when you tee off, right, on a golf course. Before you put your spike in the ground, you may look, an amateur is just going to come in and stick his tee in the ground and put his golf ball on there and smack away. I'm not going to do that. I'm going to, I want to play well. So I'm going to go back up to the tee box and I'm going to look from behind. And I'm going to look out on the tee box and I'm going to take in what I see on the fairway. Where are the traps? Where are the hazards? Where are the markers? Where is the fairway? What is the wind doing? What are the conditions? And then I'm going to look a little further out. Where is the green? Where is the pin on the green? Where might I want to land and be so that I'm in position for the next shot into the green? And then I'm going to get up. I'm going to stick this, the tee in the ground. I'm going to put the little ball on it. I'm going to come take another little look, and I'm going to pick out, just in front of me, just in front of that ball, where I want that ball to start to track. And then I stand up, and then I'm going to smack it. And I hope I put the bitch in the fairway. Right? I don't know, right? I'm not going to tell you, but I'm not hitting 300-yard drives. I wish, maybe in my mind's eye. Maybe if I'm in Colorado or someplace out west I can get, and I'm downhill. Right? So, Susan when she plays here, she's putting that ball in play. So if somebody took the counter trade, if we have a member, maybe they made 500, maybe they made a grand, they could be done. They could be done. You put 20 days of this together, or 20 days, and you make 500 or $1,000 a day, just relax. Maybe tomorrow it comes. Well, it is going to be tomorrow because the market's going to be closed. Maybe those one or two trades are going to come to you around 10:30. Maybe they're going to come to you at 1 o'clock. You got to learn to just slow your breathing down. This isn't, red light, green light, get long, get short, throw. We're not doing that. And the folks that they're not, the folks that have been with us for years, I think you would be shocked how little they trade, especially on a week's basis. You'd be shocked. And they do very, very well. Doesn't matter what they do, doesn't matter what I do. No, it only matters what you do. And are you learning? This is just one tool. One tool. Very sophisticated, very, very helpful, but it's one of about 60 to 70, in building. As an annual member, you get them all. But more important than any one tool is going to be the education, hopefully, of how to go about using them. And then you've got to hone your craft. You got to learn to ski. You've got to learn to play golf. You've got to. Now, it's got to be something that you really, really like to do, right? I mean, if you don't like to be in the snow, then, you're not going to be a good skier. Don't do it. If you don't like to hit a golf ball, don't do it. If you don't like heights, if you got a fear of heights, don't fly a plane. And I do. I don't like heights. I just don't. Never have. And so there isn't I like the whole idea of listening to pilots and stuff and podcasts. I like what they do. I'm intrigued with it. But I could never do it. Nope. I don't like heights. I don't, not at all. I just don't like it. So, trading, hopefully it's something you like to do. Right? It's okay to have butterflies, but it's not okay to have a phobia. Right? If you have a phobia about, losing money, if you have a phobia about falling down in the snow, you have a phobia about, I don't know, parachuting or something, you probably don't want to do it. Right? I wouldn't want to jump out of a good, viable plane with a chute on my back. I'd be like, did I pack that thing right? I think I'd pass out. So, any case. So, look what's going on now. Oh my goodness, Don. Look at the VIX. All green. Trend change. Yep, she's trying. She needs to go long. If she goes long, we stay short. We'll just stay in place. Don, what's the average winning trade? Well, we could do that. We could go back 5 weeks. We could go back a year and see what is the average winning 5-minute trade. We could do that. And maybe we're over it. Something tells me we're probably not. But I don't know. The last 5 weeks, I'd have to get a very fresh look. I can tell you on the 1 minute, though, that we're over the average winning trade. We are. We are at $3,000 and 1,600. That was a big fat pitch. Now, I described to you before it happened what I was looking for. And it happened. And it goes. You can't do this with moving averages. You can't do this with stochastics and MACDs. We tried. The shit don't work. It just doesn't work. So you can put them on if you want. And, and everyone that's online, they're just repackaging all the same old shit. This is all of our tools. We will use some traditional tools. And we'll tell our members what those are and how we use them. We do like Bollinger's, right? We do. as an example, probably the most used tool and the most misunderstood and misused. So we're going to let you watch. Any questions, let us know. We're also we're getting programs out to our members. We have new annual members. And I will be in the office. I want everyone to know I will be in the office. I'm in the office every Saturday morning, early until about noon. And I look forward to that because it's a chance for me to get caught up. But you can call any day from 9 a.m. to 9 p.m. And I would just hope that you've looked at the website. So questions about, and I'm happy to answer questions about cost and so forth, but it's there in the website, it's there. So, but if you still have questions, you can let us know. Not saying this is for everybody. I'm not saying that trading is for everybody. I'm definitely not. And I'm not saying that you're going to do this or that. The truth of the matter is, I don't know. I don't know. But I'm going to do my best during the Q School to listen and understand what your objectives are, what you like, what you don't like, because we're going to do all kinds of things, and then kind of hopefully help you decide on maybe a few. You don't have to use all like 70 or 80. It's not a good idea. Just settle in on a few things. And maybe you use Swing Machine in an abbreviated fashion as just a little bit of a filter. You begin to filter a layer and say, well, you know what? If the 5-minute Swing Machine or the 1 hour Swing Machine is short, maybe if I'm trading point and figure, I only take my shorts. That sort of thing. Simple, effective. I can promise you this, you're probably going to be the only person in the country doing that, right? Because not everybody has it. May not be the only member doing it, but we can't step on each other's toes because these markets are so deep. It takes over 100 contracts to move the futures, the S&P a tick. Well, we don't have members, I don't think, trading 100 contracts out of whack. I'm not. Don't need to. I don't need to drive the car 200 miles an hour to go to Lowe's. I don't have to ski. When you go skiing and you live in Florida, 50 weeks of the year, I don't need to go to the top of the mountain. I can just go to the middle of the mountain and pick out some green slopes and green and have a nice time and have a wonderful afternoon or a wonderful day. Don't have to do that. Yet folks will come in to the markets and they may even have a good size account, but you can put $100,000 into a futures account and be undercapitalized if you over leverage. What's the rush? Why are you rushing? If you can put together 20 days, $100 is $2,000, 200 is $4,000, 500 is $10,000, and maybe take 5 or 6 months to do that and assemble not just the capital, but assemble your confidence, assemble a discipline. Try to do the same thing. I think it's a good idea, right? It's a good idea in golf. They talk about having a pre-shot routine, right? I think it's a good idea to have a pre-trade routine, even for your work day. I mean, I did it a long time ago. I didn't start this way. I used to do that. I'd be like, oh shit, man, I gotta get back to the office so I can trade. Oh man, I'd come in, I'd rush in, and the train was cutting across town. I'd come running in, it'd be like 1 o'clock in the afternoon, 2 o'clock, I got a conference call, and then I got to return this call, do that call, and oh man, I'd throw some trades on and throw them. Oh, it was nuts. I didn't do the job well, I didn't trade well. Don't do that. Another big part of Q School is finding out, how does all this fit into my life? Can I trade at night? Is it best to trade at night? And you can ask the machine to give you some guidance on that. but you want to get disciplined. And so golfers have a pre-shot routine. They do certain things almost to the point where it's being superstitious. Why? So that when they get up 3 grand or 2 grand or 1,500, they're like, I've been here before. I'm not like, woohoo. I'm gonna run around the house and scream and I made a bunch of money this morning. No, or I'm gonna get on social media and bang it out. I just made a bunch of money. No, we expect to make money, and just do it. Just execute it, and but have a pre-shot. You don't want to come at this. I don't think you want to come at anything haphazard. But where are we now? So let's just take a look. And I'm going to bracket this and we'll see how it plays out. And you cannot trade without drawdowns. You cannot, what is a drawdown? Putting on a trade and your money goes down. It's called a drawdown. Can't trade without that. You also can have run-ups. You can see there. Now, what is this? Oh, wait a minute. I see some green. Well, it's probably, I don't know, certainly caught my eye, went together. It's probably trailing stops by the hedge funds. They also use trailing stops. They're using machines. They absolutely are. And we can see them. And that's all. That's probably all that was. The dominant trend is now changed. And so let's mark it up. Let's do this. Let's first look at the VIX, which we like to get in the habit of. This is a 5-minute. Now, please don't anybody trade on this because, you don't have everything, and we're not doing, we're just showing you from an educational. So the VIX 5-minute tells me it's trending up. It tells me the options market is a little spooked. That's all. So let's go look at the 5-minute. The 5-minute ES went short at what time? 10:25. This went off at 10:40, so it reacted to this. Now, if you took this short with a mini, yes, you're up $500 or $600. If you did it with a micro, you're up 50 or 60. If you did it with 10 minis, you're up 5 grand. Here is the NQ. What time did the NQ go? 10:25. Jesus Christ, Don. I thought this was a market of stocks. Jim Cramer says this is a market of stocks. He's full of shit. The markets are a commodity. Yes, you have some stocks that go better than the market. Some go worse than the market. But the market, the S&P and the NASDAQ is like gold, oil, any other market. It's been commoditized, and it was commoditized decades ago. The individual stocks is the realm of the stock pimps. That's how they call the people up and tell them a story, and we're gonna get involved in oil stocks, but we're not gonna buy the oil stocks. We're gonna buy the oil services stocks, or the guys that make the pipes. They're gonna tell you a bullshit story. Whatever the story is. Maybe it's AI, maybe it's, So here's the Dow, 1020. Are you kidding me, Don? No, I'm not. And here's the Russell, 1030. Now, what we don't know, just want you to know, I don't know how long these will last. They might last all day. They might not. They might not. And if you come in and you take it, your bread, then you take your bread, and you know what? You got to wait. You got to be out. And if the machine goes on to make 5 grand, then you made what you made. The challenge for you is learning to trade from the dashboard here and to try to do it without the emotion of the money, of fear and greed. Pilots call it, flying under the hood and not listening to your inner ear. I imagine that's got to be probably really hard to do. But I suppose that if you're properly, well, folks do it, right? They're flying people around as we speak. I mean, we don't know how they do it, but if you're a pilot, you know how. And they teach them and they train them and they learn to do it. And it's a little scary to think, though, too, is that I was listening to I like listening to the pilot podcast, and there was one pilot, he flies, professionally, he's an older guy and flies the big jumbos. And he says they always are prepared to, like if the shit hits the fan, like where they putting down. I guess, they should be, but I didn't realize. It was kind of weird to actually hear him say that. And, oh, when you're a passenger, you don't even think about it. Also, too, when they first take off and they're landing, they have something called a sterile cockpit. Sterile cockpit, and they don't talk. They're not talking about the date they went on or their the family dog or any of these stories. They're focused on what they're doing. So the other thing is, if you're at home and you're doing some stuff and you got the damn TV on and you got this going on and you got that going on, and you're taking phone calls from the boss or you got that, you might want to try getting your head into a sterile cockpit. My office is very, very quiet. I do listen to some things, music, audiobooks, some podcasts, stuff like that. I have a treadmill, but but not a lot of distractions. And I don't even let Susan, and I don't do it to her either. So she never comes in my office and looks over my shoulder and looks at my trades. I don't do that. And I don't do that to her either, because we're very different, how we handle it. But if you're in there making decisions on the money, be honest with you, you might as well not have shit on your screen. Because if you're making decisions on the money, you're making decisions based on fear and greed, the inner ear, and you're going to get hurt. And, JFK Jr. found that out, right? He took off, that little plane. He was over his skis. He learned to fly a little plane. He wasn't finished his instrument reading. Took off late, on a summer's afternoon in July, back some years ago. Took those two sisters up, his wife and sister. Horrible to think. And they fly out of Teterboro off of Cape Cod, going to a wedding on that Saturday, on a July day. Now, Susan's from the Cape, and I can tell you, and I used to actually, during college, I actually worked for the Hyannis Police Department. I was a police officer, believe it or not, and during the summer months, and for my first year out of school. And Cape Cod, the water temperature is cool, and in the summer, so if the air is, so it develops like a haze, like a San Francisco haze, but it's usually off the water. And so he found himself out there. It's horrible to think of. I've been out there fishing and the haze comes in and you can't see your hand in front of you. It's like soup. And so I can't imagine being in a small airplane and suddenly he can't see the horizon. He can't look back and even see. He's only a few miles off. He should have been able to see the coastline, but he won't be able to see the coastline. Won't be able to see the lights of the hotels or Boston or anything, or the bridge. He can't see shit. Now he's got a problem. Now he's got a problem. What do you do? And now the girls are probably scared shitless, right? They had never been in it. They're not pilots. They're not trained. What a horrible condition to be in. Now and what's crazy is that he was sinking, but he probably thought he was, well, he was trying to climb, but he turned to the right and he put the thing into a death spiral. He would have been better, which is sometimes the case here. He would have been better just to throw the plane into autopilot, and the plane would have balanced itself out on its own. But he was so panicked, so fearful, so horrible. But the mistake he made was taking off. And he put himself at risk. He put his wife at risk. He put her sister at risk. Don't do that. Trading. You work too hard for your money. You got your families. Don't do that. Learn. And if you don't have the time and you don't have the capital, you don't have the time and you don't have the capital, don't do it. Wait until you have the capital, you have the time, and you set out and you learn. And you drill, and you drill, and you drill. And I am dead serious about it because it can be a very painful endeavor. Because there aren't many other professions where, if you are in business and whatever your business is, you'll still, if you don't get the job done, you'll probably still get paid. Here, not only do you not get paid, the market will reach in and take it out of your pocket. And it hurts, right? It hurts. Now, you'll realize early on, and we will try to drive that point home, is that no one trade will make you rich. Not what we're doing. It won't happen. And no one trade is going to make you broke because we're traders. So if you want to buy and hodl Bitcoin, have at it. Good luck. I hope it works out. If you want to buy and hodl, I don't know, Research in Motion or Apple Computer or Google or anything, good luck. I hope it works out. And I hope you're smart enough to know when to get out. Because eventually Research in Motion or Apple and the rest of them will do what America Online and all the others do. And maybe Bitcoin's going to do that. Maybe it isn't. Maybe it's going to $10 million a coin. I don't know. Maybe it is. If it does, you and your family and everything are going to do great. If it doesn't, you and your family are going to be in the breadline. And I don't know. So I choose, when we invest for things that we're going to hold for a year. And there's criteria that I'm going to do when we invest. And Bitcoin doesn't meet it. It does not meet it. Doesn't even come close. And I know many people have gotten rich, and we have members that got gotten rich off of Bitcoin and Ethereum. And it doesn't mean that you can't get rich. Hopefully you're smart enough to be able to get out. But when we invest, we don't use leverage. When we invest, we're looking for companies that have accelerating quarterly earnings, accelerating annual earnings. We're looking for companies that have new products. We're looking for companies that have supply and demand. They have a lot of shares out. We're looking for leaders in their field. We're looking for institutional sponsorship, and we're looking for good management, and we're looking for a good overall market. Bitcoin doesn't have any of that. Doesn't have earnings. Doesn't have any of it. So what is Bitcoin? It's speculative. It's a speculation. It's not not for me. It's not an investment. It's purely speculation. And if you're going to speculate, you better know how to trade. Because getting in is easy. Anybody can get in. Getting out. And you don't want to be in there with a bunch of Dave Portnoy's. That ass clown, right? Another one. All right. So, any case, have fun. We'll be here. And we'll see. Now, the 5-minute, you can set your clock. It may continue and it may not, right? It may not. And but if you're making decisions, off the money, day in and day out, and we take the negative outliers, not losses, but negative outliers off the table. They have to be. They have to be off the table. We can't have negative outliers. Not a one. You will have losses, but they're going to be small. We will have positive outliers. Not on every single trade. Nope. But every week you'll have a few. Might be this one, might not, but you will get them. We're going to show you how to go about and putting yourself in position to get them. And that's basically what we're doing. But the fundamental, when we're trading intraday, the fundamental analysis, all the things that I just mentioned that we would go through on a checklist for an investment, that doesn't matter. That doesn't matter as a trader. None of that matters. The only thing that matters right now is intraday is the money flow. So what is critically important to us is one, liquidity. We want liquidity. We get that in the futures market. We want market access. We got market access. And we want responsible leverage. And we got that. Then as we go further out, maybe from intraday to a few days, few weeks, we won't even use futures. We'll use options. And we want the same thing. We want liquidity. We got limited access, but we define our risk. And we're keeping score based on profit factor. So our members are going to know what their profit factor was for each day, each week. If you don't know what your profit factor is, or you don't know what a profit factor is, then dare I say you don't even know how to keep score. And if you don't know how to keep score, then you don't know what to work on. You don't know what to improve upon. So that's critically important. And if you don't bother with that and just don't do it, well, you're going to be with everybody else. Now I put in, Susan does too, not as much because she got other interests, but I love doing this. I put on a lot of time, but I put on a lot of effort, and I'm doing it because I enjoy it. I want to be here, and the money is just a byproduct. And I love showing people, because it's like we created these tools. It's like showing the baby. I like showing off the baby. And I love it when other people, just regular folks like us, get in here and teach these bastards a lesson. By the way, I'll leave you with this. The CME is free to sign up. It's free. Sign up today. You can, for them, the CME out of Chicago, where the futures are traded. They got great educational in their own right. You should avail yourself of it. The first week of June, they're going to have another contest. You can sign up for it. We're going to sign up for it. We've done it now 3 times. It'll be for a full week. We have to play by their rules. We have to use their platform, which means we can't automate. We have to do it semi-automated. It's for a full week. And the very first time, it's on our website. I think it's still there, but there were 1,400 nationally for a full week. Going into the last, and they only give money for the top 3, which is, you don't have to compete day in and day out with anybody. You don't. It's not a competition. But in this instance, it is the way they structure it. That's the only way you get paid, and you want bragging rights. So it encourages extreme risk-taking or leverage. And we will do that because we're competing with everybody else. So, but it's not what we teach. I just make that known. On the first time we were going into the last day, we were number 10 out of 1,400. We finished 20. We didn't place. The next time, on the last day, we were in position number 50, not close enough to stay overnight and to try to win it. And we finished right around there, 50 or 60. And I think they were like 1,800. I think it was the last time, if I'm not confusing the two, they were like 2,400 or 2,500. And on the last day, we were once again 10. And at 5 in the morning, we were number 2. And I got to make all kinds of excuses, but I was literally punch drunk. I wasn't drunk, but I was exhausted. And I could literally see not only what we were doing, but I could also see what the other little bastards were doing. I could actually see what they were doing, and they were good. I'm like, you son of a bitch, I could see what you're doing. Because the account kept refreshing, and I could tell who was sleeping. I could tell what they were doing. I could tell you what they were in, and I could tell you, but I'm having to compete with them. Hey, and when I think about it, so it's 5, but I was exhausted. I started to make some mistakes. I said, I got to get some sleep. I set it up, and Susan stirred me at about 11 a.m. and she said, "Oh, Donnie, what happened?" I'm like, "Oh, what? Don't tell me that." And I woke up and I came in and they cut it off at 1 o'clock, and we finished number 7. I didn't quite get there, so we're gonna do it again. You can sign up, you can compete, and everyone's on the same field. It's real time, It's CME money, but you can. And if you're following anybody and you ask them, "Oh, that's ridiculous," well, go ahead and try and do it. If it's ridiculous, go ahead and try and do it. But we are out to win the damn thing. And I'm going to try. I'm going to really, really try. Um, and I pretty much know what I'm going to do. Now, what we had been doing is from Monday to Friday, we traded swing machine pretty much during normal session hours, and try to get ourselves in position. If I'm in the top 10, then I go overnight, and I got something specific that I'm using. I'm using swing machine, but I'm also got some other tools. This time we're going to try to get a much earlier start. I may have to go overnight those first couple of nights, and do it the other way, and get it put. You can't just put everything on red or black and finish. You won't. The folks who win it are very, very good. I'll be the first one to say it. They're very, very good. And they're probably teams of people too. Um, but it'll be me. And Susan might help me pinch hit a little bit. But everybody, we're going to let you watch. You're not in competition, though, with me or with anyone, right? You're not. The market doesn't care. I care. I want everyone to do well, but the market doesn't care. All right, so I'm going to remove these brackets so it's not so confusing. And what is she doing now? Well, the 1 minute is 3 minutes ago. They came back up. What these longs, or these two in particular, they are counter trend longs to the short now. They're coming back up, right? And it looks to you on your screen that you're into some chop, right? And it is. It is. The markets on a relative basis, the market only trends 30% of the time. 70% of the time, it's chopping on whatever interval you're on. So as traders, we just you know what you want to do, you know what you're out to do, and you just maneuver around it. We can't triangulate the markets. The markets are not fixed. It's not like astronomy. We can't use a sextant, and we can't plot the horizon. We can't plot the stars. We can't, plot the ship and triangulate. There's none of that. Nope. The market is like the surface of the ocean. It rolls this way, it rolls that way. So another analogy might be those boats that go into the Bering Sea to go do their crab fishing. The guys who drive those boats, looks pretty easy, doesn't it? Just sit on their ass and drink coffee all day and drive the boat this way, drive the boat that way. How hard can that be? Looks easy. Something tells me it's not that easy. Sometimes the Bering Sea is flat. Sometimes the son of a bitch, probably most of the time, it's raging this way, raging that way. Those guys are worth millions, right? And they're in business, right? It's their boat, it's their crew. And they got to get in and get back, One thing to get the crab on the boat, another thing to get it to market, So we got to come in and, be in the quiet of our office, or wherever you be, and execute. Get these things at the moment. We're still trading for dollars. You got to get them in the hull of your boat. Get them into your account every day. You don't have to do it. You don't have to be out every day, right? We take generally take Fridays off. but we're always here and around it. Generally don't trade early on Monday mornings. So that's all part of figuring it out how it works and fits into your life. So I'm going to shut up and let you watch. Have fun. Okay, so I just want to point out, okay, remember the 1 minute was a counter to the five? She ran up, make a little bit of money. If anybody took it, we teach everybody in the beginning to wave those off, to wave them off. We're right back on the 1 minute, short in the direction of the five. The probability is that these will be more productive. They'll be quicker into the money, larger into the money, but that's presumably what we should see. We still have the 5 minute VIX, still here at 1040. The 5 minute short is 1025, 1025, 1020, 1030. There it is. Now, if you find yourself making decisions on the money, you're trading too big. You just are. You're just using too much leverage for your account size. And that's not good, right? You're driving the car too fast. You're skiing too fast. You're over your skis. You've got to learn. And you learn by doing things small. Aim small, miss small. Drive slower, trade slower, reduce margin. That's not what most retail people do, right? And that's why they just, get blown out, get blown out. I don't want to see anyone get blown out. Get blown out, then you can't join our little club. By the way, as we go into the summer months, the Q schools are filling up. Um, so don't wait, right? If you're thinking of doing this, don't wait. Um, in July, in July is going to be a very busy month, right? And then in the fall. So we have a limited number of annual licenses that we will issue every year. Everyone who takes a Q school is promised that opportunity, right? We don't assume that they're going to do that, but they will preserve that opportunity. But once we hit that number, because we'll only grow so far so fast every year, we will then close. We'll still be here, we'll still be doing a thing, but we won't be taking on any more Q schools until January, right? So for the last 4 years, 5 years, it's been November 1, and we're on track to do that again. Could be sooner, could be sooner. So just know that. And so we want to make sure that we have a spot for you. And so don't wait. Most valuable commodity of all, not Bitcoin, not gold, not silver. Nope. Time. We can't buy it, we can't sell it, we can't trade it, but we can waste it. And I don't want to waste mine, and I don't want to see you waste yours. So Okay, everyone, I'm just going to make a note. We're going to let you watch, right? We do these sessions not to be handing out the fish, right? Right. I'm not. We're doing it from an educational perspective, so you can get a glimpse of a trading tool that maybe, well, not maybe, nobody else has, and no one other than our members, our annual members. You also get to see this tool if you're a monthly member. You get to see this tool and other tools on a daily basis. So it isn't me looking at the 40-week moving average and like, oh, look at that, and the stochastic. We're not doing that. But you are getting to see the algos, and the algos are presenting opportunities every night. And if you have some trading acumen, and especially around options, you're going to have more opportunity being presented to you every night than you have money for, presumably. um, if you want to be doing, this intraday, these tools can get on your desktop, but I just slow it down. And we've had people write to us, we've had people say to us, you would have more members, you would make, stock market cap would be even more profitable and all that if, we sped things along. And we're just not going to do that. We're just not. Um, when we set out to do this, I didn't know if anybody was going to join. And I said, if one or two people join, that'll be great. So that's what we started. And so we just go, we're in no rush. And hopefully you're not either. And we just want to take our time. We're trying to give everybody ample opportunity to basically say no. This isn't something I want to do. The monthly memberships, a month to month, you don't see the value after a month. We got a very high retention. Right? You can quit. You could. You go through the Q school. You're going to learn a lot. You're going to have some fun. You're going to learn a lot. But if you choose not to become an annual member, the way that we look at it is you're making the best decision for you. We hope you do, but if you don't, that's the best decision for you, and therefore the best decision for us. It's not a problem, and but we hope you do. One of the things that we do as well, when you join, your costs are fixed. They're never going to go up. They're not. If anything, they're going to go down. The effective costs, especially the annual memberships. Someone who's been with us, and we have folks now that have been with us for several years, their effective cost is very low. But they're in a beautiful place, and so we keep it fixed so that you can begin to schedule a business. So our attitude is keep your cost fixed to low and keep increasing value, and it works. Good afternoon. Good afternoon, everyone. Sorry about that. I had to break away, and I'm going to have to break away yet again. But we're going to let you watch the rest of the afternoon, so you've got to see quite a bit this week. I hope no one's getting hurt. I always we don't do no harm, right? We don't want to see anyone get hurt. We do these YouTube sessions so that you can see how we view the price action, right? That's all, and a chance to ask questions, chance to visit the site, and that's why we do it, right? So it isn't, if you're shadowing us or shadowing other people day in and day out, just trying to pick off trades, at some point that's just going to run its course. It won't be long term helpful to you. And even a service, you want to get, if you're going to do this trading as a business, you want to get tools. We think our tools, on your desktop so that you can do what Frederick did. Now, Frederick, I'm going to keep his privacy, but we just finished a moment ago. He may be listening. And, I asked, we in-serviced Frederick just the other day. He's just starting his Q school on Swing Machine. He gets it on his desktop. He has basically just one day. What's his first thing he says to me? Profit factor. How'd you do, Frederick? Profit factor down of 11. So if you know what a profit factor is, that means he made $11 for every dollar he expended. That's a beautiful thing. How'd that feel? I feel good. Of course it does. When you get over 3, it's like hitting a golf ball when folks say, like, boy, that was effortless. Whew. Bang, smack, smack, smack. So, but he's writing his own. He's carving out his own path, and I didn't give him the trades. He went and got them. We're just providing the insight, the tools, how they constructed, how we like to use them. And then there'll be aspects that he likes, aspects that he doesn't like, other things that he might like, and then begins to put them together. And that's what we do. So if that makes sense, let us know. The Q school is 3+ weeks. We say 3 because it's a minimum of 3. Realistically, it's probably going to go a little bit longer. We've been doing that a little recently. I don't know where we're going to be, but we're trying to accommodate folks' schedules and trying to accommodate, a learning curve. And everyone comes at this. Everyone's in a little different place. So some might need a little more time, some a little less. Some folks just say, hey, I just want to, Don, I want to do it in 3 and I want to go. All right, okay, but we need 3. But if we got to go longer, we're okay with that, right? We're okay with it. And we have on-demand videos that you can watch in advance if you want to do that. But it's not going to clip though the time that we got. We're going to spend about 1 to 2 hours together 15 times. So how many hours is that? 30 hours. That's, in a live environment. And, and we're going to try to go where you go, right? So, give you, for instance, Frederick said to me, now Frederick's got other experience. So Frederick said, Don, okay, by the way, what's going on over here for me? Because we had never even talked about that. And then that led, but he has options experience. So that led to almost more than an hour just discussing this and how we begin to use that in our intraday trading, but also on a swing trading, and how we begin to use that also with options. And that's okay. I mean, but he's in a place, and not everyone is, and that's all right. We will help you learn the terminology of options. And, it's nothing, it's not, you just got to learn it. But, he already had it. So when I say, a put credit spread, call credit spread, he knows exactly what I'm saying, what that is. You may not, and that's okay. We will expose you to that for sure. It's just that with options, they take a little longer for them to play out. And that can be an advantage as well. A little disadvantage from the learning curve, but an advantage an advantage to the extent that you may not have to be tethered to the screen as much or as close. But they got their their pros and cons. Sound okay? All right. So we're gonna let you watch. Any other questions? I don't see anything. And Alan, if you're out there, my goal, I will be up early. I'll be up later tonight too, early tomorrow morning. Alan is one of our more recent annual members. Alan, my goal is to have all of your files to you tomorrow. So they'll be coming through. We got probably about 25 or 30% of them. And we also had some updates on some files too, which we're going to be for all annual members. We got some updates rolling out next week on some things. So, by the way, when we create new programs and updates, there's no cost to that, right? We just update them. And you just upload. I'll email you. Oh yeah, yeah, yep, sure. Thank you, Frederick. Thank you. Yep, definitely. All right, everybody. So I'm gonna just break away. We'll let you watch. If you got any questions, Mark is just kind of going sideways right here. We want to show everybody. Let me slide over and show you. Now we're trading at. Let's do the NQ. We're trading at 20,150 intraday, right? Let's slide over. Now, you can't see all of this because YouTube doesn't, we can't show you the big screen, right? But if you have this on your big screen, like, oh, what is this bag of dough? Check this out. What's the pivot point? This is the daily pivot point, 20,132. Where are we? I think we're right at 20,130, aren't we? Let me go look. Without going back, I don't want to make you dizzy. 20,132. This is the daily pivot. The R1, the R2, the R3. Even though we're on a intraday time frame, this gives us a daily. This tells us where the daily swing traders are or where they think they are. But we can know. And we can also just by changing it to a weekly, we can see the weekly pivots and we can see the monthly pivots too. Sometimes they're, then we can get we can even, you'd have to do it manually, but get the pivot of the pivot, all three. But it can give us some key places. It lights up yellow when we're above the R1. So for instance, oil is trading above her R1 on a daily, right? So when oil was down here below 50, it was too. What do you want to be doing? You want to be buying, If you bought oil when it was down about 54 and you took it to 60, you just made 6 or 7 grand, right? So, very, very powerful tool. And now, everything that you see on Swing Machine Plus, everything you see can be put onto a chart. Everything can have an alert built in. Everything can be a strategy in and of itself. And if it can be a strategy, then it can be a model. And then we can go back in time and see what it would have done. So I'm not going to do that here, but I'm going to describe it. Daniel may be listening. Daniel is from one of the Scandinavian countries. I'm going to keep his privacy. I keep everyone's privacy, but that's where he's from. Really sharp young guy. He's a young guy, and he's really, really sharp. Very, very, very much so. And so I asked him, if we're trading Swing Machine on just the 5-minute, what time of the day might you want to trade it? And he said, from 9 in the morning to 3 in the afternoon. Reason being is you get the most margin normally between 9 and 3. Like, okay. So let's put the strategy on there for 5 weeks. And we did. Then we went in and we looked at the model. And the model told us what the average winner was, what the average loser was, what the average run up was, what the average rundown, all of this data. But what you want to know, and by the way, look where we are. We're at 20,130. We're right on the pivot. It's always more difficult when we're in the middle. We like to play, especially for options, when you're at the extremes. And then you gotta know enough to know where you are, and then you just wait. You just wait for what other people, when you go to get on your position trades, on your swing trades. And then when you get the fat pitch, like when Tesla, Tesla, everyone's all excited about Tesla now. We were buying Tesla when she was in panic sell. But back to the NQ. I can tell you these numbers because we just looked at it. So if he had traded every single trade, the 5 minute, for 5 weeks, and he could be listening, he could be, and we did this yesterday with him. We could have video it. If anybody wants to see it, you let me know. But probably not going to show it on YouTube per se, but I'll show it one-on-one. And the reason I don't do that is I don't want people that are driving by on YouTube that don't appreciate this or haven't listened and then get don't fully understand, because it's not these models are not guarantees. What happens in the past may or may not happen. But over 5 weeks, the profit factor was 1.34 for the machine, every single trade, and it would have made 30 grand. And the equity curve looked pretty cool. Had some dry downs, but it looked pretty good, left to right. Like, So then one of the things was, no, we like to go back in only about 4 or 5 weeks. I said, but what if we go back a year, Daniel? Let's go back a year. We went back a year, trading the 5 minute between 9 and 3 every single day. What was the profit factor? 5 weeks was 1.34. Now, we could have annual members that are listening. Put it on. You'll see it yourself. Use the continuous contract, please, though. The profit factor was 1.34. The annual take was about 115 grand. And the equity curve looked beautiful. No stop loss, no profit target. Now this is the thing, is in the beginning, you can begin, you can get too smart, try to put on too many different things and then not get an appreciation for what the strategy. And that was the point of the lesson that we were trying to make, is in the beginning you might want to just not try to optimize and get too many things on so you don't get an appreciation for what it could do. And then I said, well, Daniel, but 5 minute NQ, a lot can happen, right? We can have some pretty good run-ups, run-downs. I like to trade. Now, we teach everybody the 1 and the 5 in the beginning to try to get them on the back of the trend. But one of the things I like to trade is the 3 minute. I split the baby. So I said, let's go in and look. The 3 minute NQ for the last year, 9 to 3, no stops, no profit targets. The profit factor was 1.2, so less than 1.34. And what did it do? About 130 grand. 1 mini. And the equity curve was left to right, kind of right up. No, they had some drawdowns. When I see an equity curve that's moving left to right, I know realistically I may not duplicate that exactly. It may not go as smooth as that. This is on a time basis too, by the way. This isn't custom Renko charts or anything, but or back test. This is a time chart, so this is accurate. But when I have something like that, I know that I'm going to be, if I'm shadowing the program, I'm going to do just fine. I might do a little bit better, I might do, but I'm gonna be all right. See, the one thing I can't give you Anybody can. We can give you our experience, we can give you our knowledge, we can give you the tools, and we will during the Q School. You'll have them on your desktop. Frederick got Swing Machine. Now he's getting the paint bar, he's getting the ball markers, he's getting everything that everyone else who went before got. He's going to get the option tools because he knows. I already know he knows because he was asking me questions about options. I'm like, okay, let's get him the option tools, and we're going to send him out, and he's going to be working with them. And it's like, and he's tracking his profit factor right now. It's right out of the gate, every day, every week, and he's gonna certain things he's gonna like, some things he isn't, and that's going to be the case. And that's what we do. But I guess the point being is what I can't give anybody is confidence. That is acquired. That you acquire. But and we're going to use the technology. The one thing that can destroy confidence is getting a stock tip on something. We talked about this, a $5 stock, and you're like, man, somebody told me it's going to go from 5 to 10, so I'm going to put $50,000 on that, and really hit it. Uh, and the stock goes from 5 to 1 or something like that. That's a negative outlier. We don't do that. We don't. Everything is managed. Our intraday trading is managed. Our option trading is managed. I got Susan to help me in a really, really big way that way. I'm fortunate, but she knows all this intimately now. She knows how to do that, and then all our investments. So I'm very fortunate that way. But you can have it all too in the privacy of your home. So we're not, this isn't, we've been asked, like, well, Don, why don't you give a stock tip service? Well, I'm not a broker, not a financial advisor, so we don't do that. But you can build your own alerts. You can build your own alert service. You want to put stocks in here and on a particular time frame and have those alerts go into your email, go into your text. You go right ahead and do that. Beautiful. You build your own. And we're trying to empower you. A little different than everybody else, or actually a lot different. Have fun, everybody. Frederick, thank you. I'll be nearby. I'll certainly see you all before the market closes, but I've got to get back to work. We'll let you watch. Thanks.
Okay, we'll say good afternoon to everybody. Thanks for stopping by. We're gonna let you watch right through to the close, right to about 4:15 when they close officially. They close for 15 minutes, then they open for 30, square away their books. Sometimes they sell down afterwards. And let's just take a quick look at the where we are, where we think we are. Right. So what's going on here? Let's look at the daily VIX. All right, the daily. This is where we be. Let's go over and get the pivot point for the daily on the VIX. Where is it? It's 2269. Where are we? 2196, a little bit below. It's a daily pivot. Let's go get the daily here on the ES. This is the daily view. We're at 60 here. The market's pretty much in proportion. Market might deserve to be a little bit higher based on where the VIX is. We're trading at 5681. 5681. Where is the daily pivot? 5687. That's some shit. That's craziness, right? We're trading at 5681. So we're trading right on the pivot. So what's so boring about it, right? Like, let's look at the weekly. Where are we on the weekly? So this is what we can do, right? Without even having to, you can have all these teed up. Here's the weekly view. So the weekly has, it's still trending down. It's given away all those profits. For 7 weeks, we were up 30 something grand. It's taken it all away if one wasn't a trader. But where is the weekly pivot? Now we're trading at 5682. Remember that, 5682. Where's the weekly pivot? 5629. That's the weekly pivot. So we're kind of jammed up. That's where we be. We come back to a daily, and don't want to overcomplicate this because you can't really triangulate, but you can get a pretty good idea from a probabilistic, easy for me to say, from a probability standpoint. And it would be better if we were in euphoria and the VIX was in panic, then we just go get short. It would be better if the ES was in panic and the VIX was in euphoria, then we just go buy the market. But we're in the middle. We're in the jammed in the middle, and the market should actually, based on where the VIX is, should be maybe a little bit higher. But that's where we are. And then the daily, we're right on the daily pivot. We're right on the weekly pivot. You can go either way on this, kids. On a daily or weekly basis. So I start looking out and start thinking, okay, what about for next Friday? Next Friday, the next 2 weeks, are we likely to come in, or are we likely to rise? Um, I would be inclined to think that we're likely to come in. That's what I'd be thinking. I think we've come, very far, very fast off of those lows. The VIX is just a little too low for me, and I'm thinking, this time next week will be lower. That's what I'd be thinking. Now, how do I express that in trade terms? I'm going to, I would use options. Intraday, we're just kind of flat right now. We'll see where they want to close it. Hopefully you've made your money for the week, right? You don't want to be, and I hope no one is, but have had a bad week and you're trying to make your money, in the last couple of hours on a Friday or on Friday at all. We teach all of our members, start early, start on Sunday nights if you can, start early and end early. Try to be done on Tuesday, try to get done on Wednesday, but don't be in here on Friday trying to force it. You'd rather not. Any questions, you let us know. These machines, that's all this is. They're machines, and they are trained to go find buyers and go find sellers. And if they can, catch people or other machines offside, then they will go get them. And they will go get their leverage or their over leverage. That's all this is. So don't ask why, who's buying and who's selling. It don't matter. Um, but you can see the 1 and the 5 on the NQ. The 1 minute goes long at 20,143. The 5 minute goes long at 20,139. And what do we know? We got the daily pivot at 20,132. They don't want to take it under that right now. They want it. They're gonna go up. And if they push it up, get it up 2 up, then we'll go back down the other way. Our job: get in, get the fish, get them in the boat, get them in the stringer, play another day. But at the end like this, anybody caught short and couldn't get anything, they'll just, they could squeeze them out. Don't be surprised right after 4 we turn down a little bit, but I don't think this is going to continue next week. I'll just say this: I think by Tuesday afternoon, I think we'll be pulling back. That's what I would be thinking. But don't trade off what I think, because I don't even trade what I think. I just map it out using our tools and then go from there.